Have you ever watched a trade move against you and thought, I'll just give it a little more time, maybe it'll turn around? At first, the loss seems small, so you decide to wait, but instead of recovering, the market keeps moving against you. The longer you wait, the harder it becomes to accept the loss. If that sounds familiar, you're not alone. This is one of the biggest reasons many beginner traders lose more money than they planned. It's often not because they entered a bad trade, but because they had no plan for what to do if the market moved against them. Fortunately, there's a simple tool designed to solve that problem: the stop loss. In this video, you'll learn what a stop loss is, how it works, why every beginner should use one, and the common mistakes to avoid. By the end, you'll understand why it's one of the most important tools in Forex trading. So, what is a stop loss? A stop loss is an instruction you give your broker to automatically close your trade if the market reaches a price you've chosen before entering the trade. Think about the spending limit on your bank card. Once you reach that limit, you can't keep spending because it's there to stop you going beyond what you've already decided is acceptable. A stop loss works in a similar way. It automatically closes your trade when your chosen price is reached, limiting how much you're prepared to lose on that trade. Now, this doesn't mean you'll never have a losing trade. No trader wins every time, not even the most experienced ones. The goal of successful trading isn't to avoid losses completely because that's impossible. The goal is to keep your losses small enough that they don't prevent you from taking the next opportunity. That's one of the biggest differences between disciplined trading and simply hoping for the best. Now let's see how a stop loss works in a real trading situation. Imagine you've analyzed the euro to US dollar currency pair and believe the price is likely to rise. You're ready to place a buy trade. But before you click buy, you stop and ask yourself one important question: what if I'm wrong? You study the chart and identify the price that would tell you your trading idea is no longer valid. Before opening the trade, you place your stop loss at that level. Now your trade is live. At first, everything looks promising. The price moves slightly higher, and you begin to feel confident that your analysis was correct. But after a while, the market slows down. Instead of continuing higher, it starts to fall. One candle closes lower, then another follows. Before long, the price has moved below your entry point and continues heading down. Because you planned ahead, you don't have to make a difficult decision while the trade is losing. If the market reaches your stop loss level, your broker closes the trade automatically. Your loss is limited, and you're free to focus on your next trading opportunity instead of watching the loss grow. Whether you're placing a buy trade or a sell trade, the principle is exactly the same. Decide your risk before entering the trade, then let your stop loss do the job it was designed to do. By now, you might be wondering, if I can see that a trade is losing, why can't I just close it myself? Why do I need a stop loss? It's a fair question. The challenge isn't knowing how to close a trade, it's having the discipline to close it at the right time. Before you enter a trade, you're usually calm and objective. It's easy to decide how much you're willing to risk. But once the trade is open and the market starts moving against you, your emotions can begin to influence your decisions. Instead of following your original plan, you may convince yourself to wait a little longer. You might believe the market will recover or that closing the trade now would be admitting you were wrong. These emotional decisions are one of the biggest reasons beginners lose more than they intended. A stop loss removes that decision from the equation. Because you've already decided your maximum risk before entering the trade, the exit happens automatically if the market reaches your stop loss level. Now that you understand why a stop loss is important, the next question is, where should you place it? The honest answer is that there's no single correct way to place a stop loss. The best method depends on your trading strategy. Depending on their strategy, some traders place their stop loss below support or above resistance. Others use recent swing highs and swing lows. Some use a fixed number of pips, while others use indicators or market volatility. Although these methods are different, they all follow the same principle. A stop loss should never be placed at a random price. It should always be based on a clear trading rule. Now let's look at 3 common mistakes beginners make when using a stop loss. The first is trading without a stop loss at all. Some beginners believe they'll simply close the trade themselves if the market moves against them. As you've learned, that's much easier said than done. The second mistake is moving the stop loss further away after the trade has already been opened. By doing this, they increase the amount they're willing to lose instead of sticking to the limit they originally set. The third mistake is placing the stop loss too close to the entry price. Every market moves up and down naturally, so if your stop loss is too close, your trade may be closed before it has a realistic chance to develop. Using a stop loss is a good habit. Using it consistently is what helps build long-term trading discipline. Before we finish, let's quickly recap the main points. A stop loss is one of the most important tools for managing risk in Forex trading. It allows you to define your maximum risk before the trade begins, helping you avoid turning a small loss into a much larger one. Whatever method you use, your stop loss should always be based on a clear trading strategy. Remember this: a successful trader isn't someone who never loses. It's someone who knows how to control their losses. If this lesson helped you better understand stop losses, please give this video a thumbs up and subscribe to Forex Made Easy Hub for simple, practical Forex lessons designed especially for beginners. Thank you for watching and see you in the next lesson.